Hello and welcome to the Business Standard Morning Show. I'm Kanishka Gupta and let's have a look at the stories for the day. Nine technical glitches in the last 2 months in aircraft of an airline are not only unusual but alarming too. This not just forced aviation regulator DGCA to issue a show cause notice to SpiceJet, but also triggered a debate around flight safety. And it comes at a time when airports are seeing a jump in footfall and two more airlines are waiting in the wings to hit the sky. So, in today's episode, we ask if incidents involving SpiceJet can be brushed aside as aberrations, or does it call for a reality check by the regulator?
It is not every day that Directorate General of Civil Aviation, the regulatory body that deals with India's air safety, issues show cause notice to an airline for allegedly failing to establish safe, efficient, and reliable air services. One such notice went to SpiceJet on Wednesday. The Ajay Singh-led airline was involved in 9 air safety incidents since May 1st. 3 of those were reported on July 5th alone, including a flight diversion to Karachi. On July 2nd, another SpiceJet plane returned to Delhi due to smoke in the cabin. Meanwhile, a Vistara aircraft suffered an engine snag after landing in Delhi from Bangkok on July 6th.
Safety in general is perceptional. So to a layman, anything which does not meet with an accident or an incident is safe. But from the safety perspective, there might be a number of near misses. In general, yes, people would say that Indian skies are safe. But if you look at statistics, especially in the last 6 months, there has been a general increase in the number of incidents and accidents, especially in the areas of flight schools. We have seen a number of trainer aircraft accidents. Then we have seen small aircrafts, helicopter accidents, and near misses. And then we've had the big one, the Calicut accident. We are happy with doing the bare minimum, complying with bare minimum standards. We look at our airports, like Calicut Airport, it does not even meet the ICAO or the DGCA requirements in terms of safety. What are you doing towards safety is beyond the basic minimum. So that kind of attitude comes from a safety culture. So the bottommost is pathological culture, wherein Indian aviation is currently, wherein you hide things so long you're not caught.
The DGCA said that a review of several incidents involving SpiceJet's planes since April 1 showed that the aircraft either turned back to its originating station or continued landing to the destination with degraded safety margins. In response, SpiceJet said all its aircraft were audited a month ago by the regulator and found to be safe. Ajay Singh said a lot of these incidents are trivial in nature and happen to every airline. DGCA Chief Arun Kumar too said that about 30 flight incidents happen every day in the country and a majority of them have no safety implication. However, the strong words used by DGCA in its notice to SpiceJet have raised an alarm. A review of incidents by the watchdog showed poor internal safety oversight and inadequate maintenance actions by the airline. During a financial review of the airline in September, DGCA found that SpiceJet suppliers were not being paid regularly, leading to a shortage of spares.
In SpiceJet case, some very serious comments. And these serious comments are about systemic failure, that the safety oversight system failed and your basically the engineering aspects failed. So DGCA has everything in place on paper. It is only about enforcement and implementation. They have chosen not to take any action commensurate to the kind of violations which have been happening. Unfortunately, in this period of monsoon, when there is high stress and you have monsoon activity, so this is the period wherein maximum safety is required. So they should have hauled them up there and then. But that was not done. So this is too little, too late. Right now also the operations are continuing. So who would take responsibility if something happens now or tomorrow or the next 3 weeks till they reply? So somebody has to step in, take some immediate action to curtail their operations, to make sure that they have adequate spares, they have adequate crew, the crew is not fatigued. So all those. So this is also a part of risk mitigation.
Last month, the DGCA suspended operations of 2 flying training schools due to serious safety concerns, including unsafe runway and dysfunctional fuel gauge indicators on aircraft. However, Indian civil aviation currently enjoys the highest safety rating from the US Federal Aviation Authority. India is reportedly set to retain the Category 1 rating as the FAA completed its latest audit of DGCA in April. In 2014, when the FAA downgraded India's safety ratings, Indian airlines like Jet Airways and Air India faced multiple restrictions, including a bar on expanding flights to the US, while their existing flights faced extra checks. The International Civil Aviation Organization, a specialized agency of the United Nations, is also expected to conduct an audit of India's air safety readiness sometime later this year. In recent years, there has been a growing talk of India having an international transit hub like the one in Dubai. Also, India is projected to become the 3rd largest aviation market in terms of passengers by 2024. All of this means more passengers and flights, and so it is doubly urgent to find a lasting solution to flight safety issues.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
From the Indian skies, let us shift our focus to the country's retail sector, where Reliance is on a shopping spree. It recently partnered with Gap to bring the luxury fashion brand back to India. And apart from Gap, Reliance has brought home some 35 international brands. Our next report offers some insight into the Reliance Retail's growth strategy.
India's $900 billion retail market has emerged as one of the most dynamic industries and is expected to reach anywhere between $1.3 to $1.5 trillion by 2025. The organized retail is seen gaining 15% market share in the overall retail space, while food and grocery and apparel and lifestyle may account for 80% of India's retail market by 2025. Large market offers big opportunities, and it looks like Reliance Retail has seized it with its massive omni-channel retail play of physical stores, B2B with kiranas, and e-commerce. The company went on an acquisition spree and partnerships in the last 3 years, adding to its portfolio some of the biggest names including Hamleys, Dunzo, Zivame, etc. It has also partnered with famous global retail chains 7-Eleven. Catering to India's affluent consumers, Reliance, meanwhile, houses some of the most iconic brands such as Versace, Armani Exchange, Gap, Gas, Jimmy Choo, Michael Kors, among others. The premium segment has become one of the fastest growing categories. Also firming up its inorganic play, the company is planning to acquire dozens of niche local consumer brands to build a formidable consumer goods business.
Firstly, they are still very strong, and I believe that is the right thing to do for India on physical retail expansion. They have not really got onto the bandwagon of only e-commerce because majority of bulk of products in India are still sold through physical retail outlets, and that will be the case even for the next 10 years. Second thing which is very unique to them is that while they are very, very strong in private label, if you talk about fashion, for example, Reliance Trends is one of the most successful retail formats in India as far as fashion clothing is concerned, entirely private label for Reliance. Yet, bringing Gap, which is still an iconic brand, and denim is an iconic category, there shows that, look, you're wanting to capture both the customer which is not so brand conscious but price conscious or value conscious, and a customer who's willing to pay some amount of a premium for a brand. So the word dominance is actually, I don't think they're using the word dominance. They just want to capture as much of private consumption as they can, whether it is luxury, whether it is bridge to luxury, or whether it is a mid-market segment. So whatever it takes to capture that market to the extent possible, this is what they are doing there.
Reliance Retail's competitors are nowhere close to even put up a fight. The company has over 15,000 offline stores across categories, compared with DMart's 295 stores or Aditya Birla Fashion's 3,468 outlets. Reliance Retail's revenue has grown 5 times in the last 5 years, and the core retail revenue of $18 billion is greater than competitors combined, according to a Bernstein report.
So if you look at Reliance as an organization, as a group, its ethos always has been dominance and unquestioned dominance. I mean, it's just any industry, any sector it's got into, it wants to be the most dominant player by far. If you take retail, retail is a very fragmented sector. Even if you take modern retail, it is still kind of spread out over multiple players, right? That's one part. The second part is that Reliance, when it got into retail, I think it was very clear that before it got into retail, in fact, that it wanted to be targeting a certain number of, or touching a certain number of lives amongst the Indian population. It wanted to be having a share of wallet from a substantial chunk of the Indian consumers. And I think if you look at it from that perspective, that journey still got a long way to go. So even its dominance in the retail sector today is only a very tiny fraction of the overall retail pie that exists in the country. Retail is a very dynamic sector. While Reliance has achieved superiority over competition, it's not as if competition has disappeared. Competition will remain, and competition will possibly thrive as long as the market keeps moving, as long as consumer needs keep evolving, as long as there is somebody else who is there to kind of, with a different offer which addresses the consumer's needs a little better or uncovers needs which are completely unaddressed.
An undisputed leader in the domestic market, the aim of Reliance, according to Mukesh Ambani, is to become one of the top 10 retailers globally. Part of this bet is based on the premise that incomes and consumption power of Indians will increase across the board in coming years. However, could the uneven recovery that different segments of the population have seen stop the pie from growing larger and prove to be a dampener for Ambani's ambitions?
क्या हाल?
मत पूछ यार,
फिर से स्टॉक्स में फंस गया। तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 Paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
The revenue of Reliance Retail has grown 5-fold in the last 5 years. Meanwhile, IT services giant Tata Consultancy Services is set to announce its June quarter earnings today. Our next report tells what analysts expect from TCS results and what could be the road ahead for the company.
Fears of a global recession, especially in the US and Europe, are mounting by the day. Yet, analysts expect Indian IT companies to post steady performance for the April-June quarter. IT major TCS, for instance, may report modest revenue growth later today, led by seasonal strength and robust digital transformation projects.
we are expecting TCS is likely to report 3.4% of the revenue growth momentum in the rupee terms. However, the demand scenario is likely to remain intact and strong because of this robust demand across the services like cloudification of the data, IoT, and data analytics and other next-gen services. However, the margins are likely to remain under pressure. We are expecting 80 to 100 basis point of the margin depreciation in Q1 FY23, which is likely to be stood at 24.4 to 24.9%.
Not just TCS, but the entire industry is expected to see the long-standing pain of margin decline due to unabated supply chain pressures, as per experts. Besides, they believe quarterly revenue growth may have varied for companies due to seasonal factors.
Indian IT sector is expected to report a steady quarter with robust revenue growth for some companies led by strong seasonality, while some companies would clock modest growth due to seasonal weakness and pressure in certain business segments. We expect strong organic constant currency revenue growth from Infosys and TCS, while revenue growth of Wipro, HCLTech and Tech Mahindra will be impacted by weak seasonality. EBIT margin is expected to decline sequentially in Q1 owing to wage revision, visa costs, increased travel expenses and retention expenses, though these headwinds would be partially offset by higher utilization and currency tailwinds.
Kotak Institutional Equities pegs revenue growth on yearly basis to range from 2 to 4.5% for Tier 1 and 3 to 5% for mid-tier companies. EBIT margins, meanwhile, could decline 70 to 400 BPS year-on-year. That said, despite a strong near-term demand outlook, analysts caution that risks to long-term growth have increased significantly. Analysts at Motilal Oswal anticipate the impact to be felt in the second half of FY23 and in FY24. The brokerage has trimmed its FY23 and FY24 EPS estimate for the sector by 2 to 5%, despite a positive 300 to 400 BPS impact from weaker rupee. On the bourses, market experts believe that related stocks haven't completely priced in a recessionary environment. According to Motilal Oswal, near-term pressure on valuations will continue as the worsening macro commentary is likely to impact industry deal flow and revenue over the next few quarters. However, it suggests investors utilize any consequent correction to raise allocation to the sector. Apart from corporate earnings, investors will monitor the US employment data for market trajectory today.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Meanwhile, some experts see the RBI's recent measures to show up rupee as knee-jerk reaction, which may send wrong signals to the stock markets. They said that the country is still sitting on a pretty high Forex reserve. But ever wondered, what is the Forex reserve? Let us find out. The Reserve Bank of India on Wednesday announced a host of measures to boost forex inflows and push the value of rupee. The steps include doubling the borrowing limits for companies from overseas to $1.5 billion, temporarily removing interest rate cap for banks to attract deposits from NRIs, and relaxing rules for foreigners to invest in local currency bonds. In the first quarter of the current financial year, the merchandise trade deficit more than doubled to $70.25 billion year-on-year, from $31.42 billion. This comes on the back of a surge in global crude and commodity prices due to war in Ukraine. Also, the rupee has plunged 6% against the dollar this year. Apart from the falling rupee, the country is depleting foreign exchange reserves or Forex reserve is also troubling the central bank. It has dropped nearly $6 billion to about $593 billion. All that we have told you so far begs the question, what exactly do we mean when we say Forex reserves? Forex reserves are regarded as the health meter of a country. These reserves are assets like foreign currencies, gold reserves, and treasury bills, among other things, maintained by a country's central bank or other monetary authority, which checks the balance of payments, deals with the foreign exchange rate of currency, and maintains financial market stability. So what are the key components of Forex reserve? RBI Act and the Foreign Exchange Management Act 1999 govern the foreign exchange reserves. It can be broken into 4 categories. The first and the largest component is foreign currency assets. It constitutes about 80% of the total portfolio. India invests heavily in the US Treasury bills, and about 75% of the country's foreign currency assets are invested in dollar-denominated securities. Then comes the investment in gold and special drawing rights from the IMF. And the last is the reserve tranche position. So what is the purpose of the foreign exchange reserves? First, to ensure that the RBI has backup funds if the rupee rapidly devalues or becomes altogether insolvent. Second, if the value of the rupee decreases due to an increase in demand for foreign currency, then the RBI can and does sell the dollar in the Indian money market so that rupee depreciation can be checked. Third, a good stock of Forex establishes a good image for the country at the international level, as trading countries can be sure about their payments, thus helping in attracting foreign trade.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Meanwhile, our neighbor Sri Lanka's Forex reserve touched $2 billion in May, while Pakistan's reserve recently fell below $10 billion, which will fulfill just 2 months of import. That is all for today. We will be back with more news and analysis on our next episode. Stay tuned and thank you for watching. If you liked this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.